It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, we are back with your Real Estate Breakfast, bringing you the latest update on the Australian housing property market, now available and streaming at you from Spotify and Apple Podcasts. From Mildura to Perth, plus regional markets right across the country. And remember that we are not a real estate company pushing property listings on a real estate podcast. Because we are truly independent from any real estate company, you are only getting from us property info from all of the experts without any sales pitches. Yes, delivered fresh to you every morning. It is a Monday. Weekend went by pretty rapidly. If you were out in amongst it, did you find a property? May the 25th, June, is almost here. Here's a bit of a disturbing report. Australia is wasting more than $1 billion every year building off-street car parks that end up unused and unwanted. This from a Grattan Institute report. The report recommends scrapping rules that force developers to include a minimum number of car park spaces when building houses. The Wasted Space report found that upwards of 40% of car parks were left empty every night in apartments in Sydney, Melbourne and Brisbane. And there are now more car spaces in apartments in Sydney and Melbourne than cars. How crazy is this? The report found these parking minimums increase construction costs by $70,000 for a two-bedroom Sydney apartment. Parking minimums add $62,000 to a price tag of a two-bedroom Melbourne apartment, $113,000 to a one-bedder in Brisbane, and $137,000 in Perth and $95,000 in Adelaide. And very shortly, I'm going to dive into the proposed solution to all of this. But let's right now go to Perth. We're going to catch up with Damian Collins from Momentum Wealth. And a very good morning to you, Damian. Welcome on to the Real Estate Breakfast. Yeah, those car parking spaces, what a nightmare.
Look, it's an interesting one, Craig. The challenge is, of course, for most buyers, they've still got the psychology that they need car bays, and even if they won't necessarily use them, there's always that occasion they might. And for rental purposes, people think tenants will need a car base. Certainly, I think that the council should not impose minimum car bays, but I think you'll find still many buyers will still want to have those car bays for the just in case.
Your younger generations now, a lot of them, they are just using so much more public transport. And then you've got a lot of migrants that come in. They are very heavy on public transport. So, yeah, the whole thing has kind of changed probably over the last 20 years. Now, let's have a look at the Perth property market. We have talked about recently Perth's property market beginning to show signs of this slowdown. And what are buyers in Perth doing since the budget announcement? Well, they seem to be becoming far more cautious, with some agents reporting longer selling times and less aggressive offers, particularly in the middle market suburbs. What are you seeing and observing around where you are?
We certainly have seen a slowdown. There was, Perth's had a very significant growth trajectory over the last 5 years. So it's slowing down off a very high level, but still growing at a fairly solid rate. Clearly, the budget changes are going to have some impact. The investors in established areas are going to have less borrowing capacity. There's obviously, they can't use that negative gearing for cash flow as the proposal stands. It's coming off a high growth base to something more moderate, which is what we needed, but it certainly has no signs yet that we're going backwards. It just seems to be a slower rate of growth.
What about the unit market? What is happening around that space? Because it does remain, and hardly surprising given what we know, very highly competitive. Some units are selling within 7 days, and if you are a first home buyer, you are chasing these lower priced opportunities as they present. But the investors, they are still in there, aren't they? But what do you think likely to happen in that particular market, the unit affordability market?
Well, look, as the house prices move towards that $1 million median, it's priced a lot of young people out to, even on good incomes, it's very hard to borrow to that level to buy a property at that price. We have seen that switch. People go, well, look, if I can't get into a house or even a villa, I'll look for a unit. And so that's why that market has been in strong demand. But what I'm expecting to see now, while there were certainly investors looking at and buying in that space, given the change in negative gearing, we have certainly seen a push towards yield already. Investors are saying, well, look, still want to buy an investment property, but I really want to get something that's got a better yield than maybe a traditional house would. So that's pushing more investors towards a unit type product. And not only that, borrowing capacities come off a bit because they can't use negative gearing in their servicing. I think we're going to still see the lower end of the pricing in the market, particularly in those units. I think that's still going to be pretty strong for a while as we see that change as existing investors switch more from a housing product towards a unit market where there's better yields and there's more affordability for the investor.
You know, for the last week or so, we've been talking about how some residential investors are looking at moving into the commercial property space. Now, Perth's commercial and office property sector is starting to attract renewed attention. Several significant office and commercial transactions have occurred recently, with buyers targeting well-located assets offering long-term value and secure tenants. So Perth's improving economic outlook, you've got the population growth and the comparatively lower entry prices. That is all helping rebuild confidence in parts of the commercial property market after years of softer conditions.
Oh, absolutely. Look, the negative gearing changes are certainly pushing more people to look at yield, and commercial does provide that. A good quality commercial property will still provide around 6% net return, whereas a residential property is going to provide around about net 2 to 3% return after all costs. So certainly investors are saying, well, if I want to get into the property market, commercial is a way to have a go and potentially to have a look at. It's quite varied in the sectors. Some sectors are performing particularly well, others are not performing quite as well. And so you need to be discerning about where you go and what you're looking for. And we're finding more investors like to, rather than necessarily buy just themselves, they go into property funds or property syndicates where they own a part of a property. They don't own the whole thing, and they can still get all the benefits and cash flow returns and capital growth, but they're not having to manage those properties.
We are talking to Damian this morning on our Monday. He is in Perth. When we come back, we're going to talk about the long-term drivers in the residential property market. That is next.
Remember to follow us on any of the podcast platforms so you never miss a real estate podcast. You can follow us on Apple, Spotify and Amazon. Know your property with us. Stay ahead of the competition with the latest news, insights and data analysis on the property podcast that keeps you informed.
Okay, back to this problem of wasting more than $1 billion every year building off-street car parks that end up unused and unwanted. So, what can be done about this problem? Well, they suggest unbundling car parking spaces so that they can be bought or rented separately from a unit. Several councils have decreased their parking minimum requirements over the years, but the report says that they should be abolished altogether. They estimate that this would result in 86,000 fewer car parking spaces being built in the next 5 years. The result, a staggering $5.2 billion of savings. Their model suggests scrapping these laws would result in 140,000 more dwellings being made commercially viable across Sydney and Melbourne alone. Yes, because that's a real problem, isn't it? Because the developers, we're in that space of trying to make the numbers work commercially. So take that component out, and they're going to have a much better chance of putting that development forward. It is a Real Estate Monday. Damian is here from Perth. You know, what about that, Damian? These developers, they've been struggling with numbers for such a long period of time. You see those car parking spaces. I mean, this is the difference possibly between a green light and a red light.
Yeah, it's expensive to build the car bays. Generally, they're underground, and with the car parking ratios per unit, it certainly adds a lot of cost to the projects. The overseas model is, in a lot of places, is that you don't have an allocated car bay. There's a certain amount of bays for each building. That way, every buyer in there doesn't have to worry about, I need 2 car bays. I don't want to go to nil. So everyone shares the car bays. You just park wherever you can. So look, that's certainly an option I think might be more suitable to Australia, particularly in the high density areas around Sydney and Melbourne. Just having common car bays, no one owns one, and that way you can actually develop and build to what really the likely requirements are, rather than having to build to some perception that everyone needs 1 or 2 car bays in their units.
Yeah, good point. I actually saw a video last week. Here's this guy with this Ferrari. He drives into this single sort of bay area. He lives on the 5th floor, and it takes his car all the way up to his apartment. So where there's kind of a balcony, it's all enclosed. He just backs off from the ramp and the car is inside the apartment. Looked fantastic. So maybe for those higher end apartments, that's the solution. I don't know. I want to get back to the commercial stuff because you mentioned to me off air, industrial. There's a bit going on in that particular asset class in commercial in Perth at the moment.
Craig, right across Australia, but also in Perth, we've seen just strong demand for industrial property over the last 6 or 7 years. And it's really been fed by the drive in logistics, and that has meant people getting home deliveries. That's growing. So we've seen prices and rents up significantly. There's still a very low vacancy rate. We're talking about just a few percent vacancy rates in Perth and some of the other capital cities as well. And that compares to office where it's closer to 20%. Still really strong demand, and I can expect that to continue. I wouldn't expect we'd see the rapid price growth that we've seen in more recent times, but certainly the fundamentals are there. And as long as the economy stays in decent shape, industrial property still be a good place to be.
Yeah, it's all interesting at the moment with the commercial space with investors and those budget announcements. Long-term drivers, we should talk about the residential market in Perth. You've got some thoughts about long-term?
Well, Craig, when I look at investing in any market, we invest around the country. I'm looking firstly at a city that's got population growth. More people always means in the long run, more demand for property, of course, and that means higher prices. Every city that's got a larger population globally tends to have higher house prices just because that strong demand is there. So that's number one. Second thing I look for is the strength of the economy. One of the things in Perth, it is a mining town, and that's what people have to understand. It's oil, gas, iron ore, gold and lithium and other minerals as well, but they're the key drivers. So if those sectors are performing well, the economy in Perth will be good and people will be coming here. Of course, it can be more volatile, but your average wage is very high. The average wage in Western Australia is second only to the ACT. It's more than Victoria, more than New South Wales, and a long way ahead of places like South Australia and Tasmania. So strong income, strong economy, strong population growth. They're the key drivers on the demand side. And then on the supply side, you're looking for the ability to provide excess supply. Perth can spread out a long way, but certainly in the established areas, and they're the markets we target, there's not much land left if you want to get within 15 kilometres of Perth. In fact, it's pretty much all gone. Trying to find out those areas within a growing city where there's going to be demand, but there's no more supply or very limited supply coming on. You go into a CBD, you got the risk of a lot more apartments coming on, but if you go in that mid-ring 5 to 20k of the city, there's generally the zoning doesn't allow for a lot of excess developments. Of course, it'll have its ups and downs on the way, but if you're investing in residential property, you've got to have a 10-year time horizon. On that basis, if the economy stays strong, which I would anticipate it will, or it'll have ups and downs, that Perth is still a good place to invest.
Good stuff, Damian. Well, there's a lot of great points there. You enjoy your Monday, and thank you so much for coming on to the Real Estate Breakfast this morning.
Thanks, Craig.
It's your weekday real estate breakfast with news, interviews and predictions every morning on the Real Estate Podcast.
What I see in Brisbane is there's some really key indicators that tell us when a market is either slowing or speeding up. You know, the number of people at open houses, the speed of offers, how quickly offers are being made, the sense of urgency people have and that fear of missing out. The heat's coming out of them a little bit.
Young people today, I think, are so overwhelmed by information that's coming in, have not necessarily got the skills because no one's been able to teach them what is important, what's not important.
Even pre-budget has meant a lot of capital cities have decreased in value. So the next 12 months, it might not even be a case of who's going to increase the most. It could even be who's going to decrease the least.
Most people don't realise that whacking a granny flat in the backyard to get yourself a little bit more rent then turns your property into an investment property. There goes your home insurance. So a quick cash grab for some extra money to pay your mortgage off could land you in a lot of hot water.
We connect you to the best real estate information across Australia. The Real Estate Podcast.